Welcome back to another Gold Rush Weekly Watch List. We have an interesting week ahead with earnings. Earnings is a major catalyst for a move in SPX this week. Just quickly looking through some of the names that are reporting this week. Now, again, I think that we're going to get a lot of, like last week, we got some names that reported that would give a clue as to the health of the market. We have an addition of those names this week, but we have some actual market movers coming up this week. So just going through from Monday through Friday, I got Coca-Cola, I got Phillips, we got Cleveland Cliffs, we have Whirlpool, AGNC, which are some of those names that kind of give you some context as to what, how the economy is performing. On Tuesday we have Verizon, we have UPS, Halliburton, GM, McDonald's, 3M, GE, Pepsi, Spotify, big names. After close, we have Microsoft, we have Google, we have Enphase, we have Visa, we have Chipotle, which is probably going to go to 3,000 this week. Coming up on Wednesday, we have Boeing, we have Hilton. I think Hilton is going to be one of those names to watch for, for some economic, as an indicator of how the economy is doing, right? Hilton is going to be a big one. ADP is also going to be a really big one. Because ADP obviously is almost directly correlated with the or their growth and how they shrink and how they grow is directly correlated with the workforce. So definitely a name to watch. We have Meta after close. We have Roku. We have Teladoc. Who else? Let's see. Thursday before open, we have AAL. We have Caterpillar. We have Eli Lilly. We have Southwest. We have Valero. So some energy names, some travel names. We have AbbVie and Merck. Some healthcare names. After close, we have Amazon, which is another one that I think it lost its touch with tech, right? It was a big tech name. I think that it's a little disconnected from tech at the moment. I think it does move with charts, with tech charts, but I think that it's disconnected from the way that Microsoft and Google and Meta are more of an influence on that sector, right? I think Amazon's more closely tied to retail at this point, but maybe it'll kind of correlate itself again with the Apples and the Googles, etc. We have Intel, which is another big one. Cloudflare is another big one for kind of what the vibe is, right? We have Pinterest, we have Cloudflare. Sorry, I just said Cloudflare. We have Snap, we have Gilead. And then on Friday before open, we have Chevron, Exxon, Cameco. So some energy names on Friday. So a lot of big earnings this week. As DYT mentioned, there's no Fed speakers this week. So we might have, and I think that the reason for that is I don't think they're allowed to. They know their influence on the market. So I think that they're just going to take it easy as some of these bigger names report. But we have Apple again next week. So who knows? Who knows how it goes? Let me just take a look at one thing real quick. Let's see. Yeah. All right. So on your screen now, and I'm going to do it the same way I did it last week. I'm just going to go through SPX, through a few of the sectors that hold some of the names that we play. And then I'm going to go into some of the setups that I like for the week. If you guys have anything you want to look at, go ahead and drop it on the trade floor. All right, so the first one's SPX. Obviously, SPX. Let me just zoom out. Let's go on the weekly. Let's go on the monthly. Nice move to the downside coming off of the 2021 or 2022 high. Nice moves to the downside, and then we had kind of a little bit of chop here, June, July, August of last year. It dropped and then bounced right back into that range. So you see kind of the range of this candlestick of June. We've been pretty much trading that whole range the entire time. Let me go ahead and draw a box on it. Ever since June, we fell underneath it in at the end of the year here, September and October. And I'm actually going to bring this up to the body. But right now, it looks like we're right back. We're just at the other side of that range there. So I think we're in a key spot. You see all this chop, and pretty much the high of all this chop was like 4,100, and so now we're not well above 4,100, but we're just holding above it. So I think that we're in a crucial spot. If I go into the weekly, I have this, and let me get rid of this box now. If you were in the server last week, I mentioned that we're at a key area here. You see where there was a bunch of support in the past, some consolidation, nice bounce. Previous demand zone here, right? Because you see that as soon as price reaches area, buyers bought it up. Same thing here, but it kind of based here, and then buyers jumped and brought the price back up. And then it flipped into resistance over here, right? So key, obviously a key level. We formed a weekly doji on it last week. We did break the range of the previous week to the upside by just a couple of pennies, or maybe a couple of dollars. What is it? Let me see. 41.6319 and 41.69. So $6 move to the upside, which is like a 0.02% move, breaking above the previous high. So we tried it, right? But it did sell off a little bit of indecision coming into Thursday and Friday on a daily chart here. But I do like the fact that it didn't just oil spill out of this back into the moving averages, right? It didn't put in big red candles like these. Not to say that it's not that it won't do it, right? It can possibly do it, but a little bit of indecision coming out of this supply zone, I think is a nice, it gives us a nice opportunity for buyers to step in and kind of bring it above to make new highs. My whole point of this is I want to see it make new highs. We had this low here, we have a higher low here, and we have a higher low here, right? We have these highs over here, and they get higher progressively. And then we have the first trend break here, right? This high has now broken above this high here. And so I want to see if we can continue to make a new high to break above this high. And that would put us in a potential uptrend, right? I just like to see trends. Chop is just very difficult to trade. You have to be really skilled. You have to be really patient. And when things are trending, it's much easier for us to make money, right? The whole point of this all is for us to make money. So I would just love to see that kind of burst into an uptrend and get people to some new confidence. So that's what's going on with SPX right now. I know that ES, as of a couple of hours ago, was gapping. Yeah, I mean, I wouldn't call it a gap down. It's just, it's forming a doji. There's not much going on there. So we'll revisit it at the end of the call. We do have the 20-day moving average sitting here at 40.94, and then we have the 50, which I think if we do pull back, it'll definitely be to this 50-day at 40.34. But we'll see. There's no way of telling right now. And then we almost had an inside day, but we did break the low of the range of the previous day by like 70 cents. And then buyers stepped in immediately. So I think there's some action if buyers take control to bring us back to the upside, break above this level here at 41.95.44 would be the level to give us a new high and a potential uptrend, right? So that's what I'll be watching. So we'll see. I'll take a look at those names, Jen. Right. So we'll see. Next sector is QQQ. This has been sitting within this kind of range ever since it broke out of this kind of cup and handle here. Or if you want to even zoom out, you have this massive cup, right? This massive cup here, this handle over here with a continuation move. It's been ranging within this channel between the high of the move and the 61.8% Fibonacci level for like 2 weeks now, almost 3 weeks. And right now it's sitting right above the 20-day moving average, right? So if we can hold that 20-day moving average, I think we can continue to move to the upside. I think that, but again, that's on the technical side. That's ignoring fundamentals. If we take the fundamentals into account, right, we obviously have earnings coming up this week, and a lot of the names that report earnings this week will influence this to move either up or down. So I think that this is going to stay within a holding pattern for the next couple of days until earnings brings it into a new direction. Either a double, here we have a potential double top here with this high here and this high here to push us further down. Or we have some sort of flag, like here's your flag pole, and here's your flag, and it's just kind of consolidating for a continuation move. So that's what I'm seeing with QQQ. Obviously, if we day trade, it's fine, right? Even if you're like overnight swinging, you got to kind of know where you are. Like we're at the bottom of the range here, top of the range here. There's some room to go to the upside, but there's still some room to go to the downside. So we'll just play it as it comes. Next one is XLF. Let me just take a quick sip. Okay, XLF. Now that I'm looking at this now with kind of a fresh set of eyes, and I want to draw out this move here from the low, run a fib into this peak, this little peak here where it consolidated, popped, and then fell hard. We're currently sitting at the 50% Fibonacci level here. And we're forming, I mean, I would call it maybe a bull flag on it. I'm not really sure. You know, XLF is one of those charts that's really ugly and very difficult to trade. And you have to kind of have foresight and see that there's some strength in a particular direction or not. Now, this looks like it's bullish based on, obviously this bouncy move here, a little bit of a pullback, and then a continuation here, a little bit of a pullback with a lot of buyers stepping in at the end of the day on Friday for XLF. So, you know, so let's see if there's a potential for this to reach that 50-day moving average, that red line there at 33.58. We did get the bearish cross, right? We did get the death cross from the 50 crossing to the 200-day, and as S mentioned, there's a potential cup and handle to the downside, right? Here's your cup, right? Here's your cup, and then there's your handle potential, right? So if it doesn't take out this 50-day, or even if it reaches if it doesn't take the 50% out, or it reaches that 50-day and rejects, it can easily fall back to retest the lows here. And again, this low isn't the lowest point of the range. You can see the lowest is at 29.59, which is a future target if this does pull back. So we'll see what happens with it. And obviously this has an inverse relationship with tech. You know, there's some days that's weird that they kind of move together, but for the most part, if tech goes up, money goes into tech, money comes out of energy, money comes out of financials. If money goes into energy, money goes into financials usually. So, I mean, it depends. It really depends. I think that most of the bank's earnings are done. There might be one or two more names this week, but all the big names are done. So, so we might be good to go in terms of XLF, but we'll see. We'll see what happens. Last sector is XLE. There's obviously more sectors, but I just want to focus on these for now because I don't want to give us, you know, too many things to look at. Now, this is almost doing the same thing. It has kind of an inverse cup and handle, upside down cup and handle vibe, right? Here's, you see how it kind of price has risen and rounded and is falling, right? And now it's kind of retracing some of that move, finding some resistance here. I had this little box drawn out where I see that there's a potential supply zone. And when it reached that supply, it pulled back. So we haven't done the death cross here. Actually, the 200-day moving average is pointing up, so that's nice and healthy. But again, you know, and then we broke the range to the upside of the previous day, right into that 100-day moving average. But it doesn't really mean much. I mean, XLE it's just kind of good to know which way it's going. Right now, it looks like, I mean, there is this little bit of a gap to fill here underneath this candlestick, this big candlestick here, into this candlestick here. We did form kind of a double bottom on this support level at 84.87-ish, which can also be kind of a double bottom on these moving averages. But we'll see what happens. I mean, it really needs to take over that 100-day moving average, and then it really needs to take over this. Let me just zoom this in a little bit. It really needs to take over this supply zone before I can feel confident about XLE, you know, coming up and making some fresh highs, right? The first target would be that 100-day, which it rejected on Friday. The next target would be obviously take the highs out, 1, 2, 3, 4, and then take out that supply zone and trade up in this area here, like 89, 90, around there. But I don't see it just yet, right? So that's that. Let's go into, let me see what I have. Let's do the blue list. Now, the blue list I have for this week are names that seem like they're going to give a more defined move. Is that right? Let me just take a look. Yeah, all right. So the blue list are names that I think they're conditional, right? It's like there's no clear setup. It's very conditional, depending on what happens tomorrow, depending on how the market opens, depending on some of these earnings, right, etc. So here's the range for Friday's candlestick. There's the high of Thursday. There's the high of Tuesday, right? Then we have that 50-day sitting right there. Underneath that 50-day, we can reach the low of these candlesticks. I like to use, I don't like to complicate things. Just keep things like, actually, I'm going to get rid of this one. You know, if there's a low there before, there's likely going to be a low there again, right? Like, let's not complicate this. We don't have to, you know, do, like, I know I pull out Fibonacci's every once in a while, but there's no need to really complicate these things. If it looks like it's going to go up and it stopped somewhere before, it might stop there again. You know, do the same thing on your charts and plot some of these levels, and you see how well they play out throughout the continuation, right? So as time goes on, right? So AMD, I see a massive cup and handle, right? Here's your massive cup here. And then there's a handle, there's kind of a handle here. There's also another handle here. What I'm loving about AMD right now is that it's sitting right on top of that 50-day moving average. Buyers, let me just zoom into this on the 30-minute. And yeah, buyers at the very end of the day, they kind of bought it up. Price opened below the 50-day and then came down, made a new low of day, and then buyers stepped in and brought it right back up. It's fighting with it in the after hours, but to me the after hours don't really matter. Yeah, if it holds, this AMD I think is one of the better setups, but it really depends on what's going to happen with this 50-day, right? If it fails here, I mean, there is some previous resistance that can act as support, like at that 88 level or that 86 level. Some previous resistance that can potentially act as support there. We did get the golden cross on all three of the smaller moving averages through that 200-day. So, and then, that's when I decided to start pulling back. But I mean, this thing has been on a massive run, so it needs to pull back, right? Nice healthy pullback into the 50. I just want to see it break out out of this this channel that it's in right now. Right, let's see if it can maintain the 50-day. If not, let's see if it can maintain the low of day. And then I want to see it break out of this channel and work its way through to the upside. Now, if we do fail to the downside, we got some predetermined targets here, with the final target being, we got this 83, and then I would target 80, right at that 100-day moving average. And it's obviously a nice round number, so I would just target that as a final target to the downside. Now, I don't know which way it's going to go. I think this is going to give us a good risk reward in both directions. This is, I think it's a long position. Let me see. Yeah, this is a long position. So if you want to go long, leave your stop at low of day. You could target, if this breaks above the high of yesterday or Thursday rather, it has the potential to hit this moving average within 2 days, right? So that's a 2.19 to 1 risk reward ratio. So not bad. You enter, leave the stop at low of day, then you bring it up to the open or the close of day, brings it up to 2.78, then you bring it up to the low of the previous day here. Now it's 3.93, then you bring it up to the wherever your entry was, and now you have an infinite risk reward. So, and a lot of AMD sweepers 90 call hit the robot room, right? And we're currently at 88.43. So that's the 90 will probably be what we play for this week, and it'll likely get in the money, especially if it just takes out the high of previous day. It'll magnetize to 90 pretty quickly. So I'll be watching that. But again, it needs to hold above that 50-day moving average. So that's the main part for me, right? Obviously, and if you guys are riskier and you have a different setup, then go ahead and stick to your rules. But for me, I think the main part is that 50-day is going to be crucial. Next one is NVIDIA. NVIDIA has been ranging within this channel for about 2 or almost 3 weeks now. Every time it falls below the channel, buyers bring it back up. Every time it hits the top of the channel, sellers bring it back down. So they've been fighting in this level between 265 and 280. Take a quick sip. So now the reason why it has my attention today is because, and there was some plays on it, a couple of plays that we had on it last week. But the main reason why it has my attention is because for a while now, it's been riding that 20-day moving average, that blue line. Every time it drops underneath it, something will bring it back up, right? So this back here, it was earnings. Over here, it was just, some faith or the market or whatever the case is, but it brought it right back up. And then even down here, we were underneath it for a couple of days and we were right back up above it. So let's look at the 30-minute. It looks like we're fighting with the 20-day moving average. And as of pre-market, we're above it, but at the end of the day, we struggled to close above it. But you see, buyers wanted to bring it right back above it, right? Buyers want it above that 20-day moving average. So I find that very interesting. So I'll just be looking for that. I want to see if buyers can take control and bring it right back above that moving average. And try to take out this 280. I think the 280 is going to be a key level, especially with all this consolidation that occurred on Friday. All this consolidation brought it up to a nice move, nice resistance, brought it down on a double tap, fell down, formed a a higher low. Found some support at previous resistance. Right, here's your support, here's your resistance over here. So it's looking good. I just want to see how quickly they can overtake that 20-day moving average and see if we can break that 280. If we do break that 280, 285 is an absolute magnet. Exactly. Consolidation is a trader's best friend. When you look at consolidation, you know that there's a move that's happening right after. And now it's your point to make a plan for the upside and the downside, and to execute when it gives you the signal to go, right? That's about it. No guessing, just execution. So if it breaks above the 200-day, it's going to come and test this 275, obviously, is a magnet, and then from there 280, from 280 285, and then from there 289, right? If it fails, or if it kind of sticks its head above and then sellers go in full force, it's going to come back down to this 265 level. And then ultimately, if it does break this level, it can target some previous support here at 258-ish, right? 255-ish. And then if it fails below that, straight to 251. So I'll be watching. I think it has upside in it, especially based on this higher low, but we'll see. When you see NVIDIA, you know that you have especially on the upside, you have those nice round numbers. 275, 280, 285, then 289.46. And then downside, the ultimate target would be 250-ish, right around that 50-day moving average. And again, I think it depends on what. For NVIDIA, I think it'll depend on some of the other names, right? The SOXL, the TSMs, the MUs, right? The LRCXs. It's going to depend a lot on some of these names. So if you're interested in playing it, I would just keep your eyes on it. Let's see, NVIDIA cost. Next one's Costco. Okay. I like Costco. I like it a lot on the weekly. Now, if you look at it on the weekly, there's a very, very clear coil going on here. I'm going to draw it out. And when I say coil, I mean like a wedge. Costco has a massive move loading. I mean, it's been paying us. It's been paying us pretty much this entire time, but it has a really, really strong move loading. Yeah, Costco gave a nice move last week, and I think that the move hasn't even started. I mean, realistically, you do this, right? You measure the length of the base, and this is purely how do I do this? How do I do this without skewing it? There's no way to do it. TOS, you can do it. But anyway, you measure this base. Actually, I can do it with the ruler. You measure how long it's been basing for. And then you draw the same. I can't rotate it with this. But anyway, the goal would be to take this exact measurement and go upside or downside. So if it breaks to the upside, then that's your final target. For this, it looks like it's going to be around 700, which is pretty nuts, right? And then to the downside, it would be around 300 or so. I don't see that happening. Obviously this year, but once it breaks out, the trajectory that it's going to go in, it's going to make that nice move. Now look at what it did here. It kind of had this sideways consolidation, fell, made a spring, and then it gapped. And the low of this move here was 317, and from 317 it formed higher lows and higher highs all the way into, what is this? 612. So 100% move out of a nice consolidation. So there's no reason why out of, how many weeks is this? Right, this is 56 bars. This is over a year, a little bit over a year of pretty much sideways consolidation. Can give us a nice, maybe another year of just upside or downside, depending on what the fundamentals say. So I like Costco a lot, especially on a weekly. Clear upside targets. I'm not gonna go too far on these. Right, we just got these three. I'm not gonna go too crazy. If we go into the daily chart. And you see, like, every time we kind of get to the top of this resistance line, seller step in and bring it back down. Again, seller stepped in and brought it back down. We bounced higher low. Seller stepped in on Friday. So let's see what happens. Let's see what happens with sellers. Who's gonna take control? Sellers or buyers on Costco? And Costco is another one that I think Costco should be on everyone's chart at all times. The reason why is because Costco is like the economic indicator, right? Costco, the Costco $1 hot dog is the indicator, right? So if you're following Costco news, they're like a dividend aristocrat or dividend, whatever the other term is, where they're constantly increasing their dividend, right? Their output. And so as long as they continue to do that, the economy is strong, right? I mean, it's not like it's like the strongest economy ever, but once things start reversing on that front, then we're in big trouble. I'm looking for I like the inside bar on Friday. I think it did break the range of Thursday by a couple dollars or $1 or something. Let's see, 490. 510.66, 510.64. So we didn't break the range of the previous day, so it is an inside bar. Yeah, I mean, those prices, you just watch Costco. Just keep your eyes on Costco. That's why, like, dividend investors love Costco. Long-term investors love Costco. Traders love Costco. Costco is low-key the indicator. So we formed a massive breakout bar on Thursday, and then an inside bar that fell within the range of Thursday's candlestick, but didn't retrace fully, not even to 50% of the candlestick, right? So let me just measure that out for the visual people. You know, I'll just draw a fib from top to bottom on this candlestick, and I see how much this Friday candle pulled back, and it pulled back less than 30%, right? Less than 30%, or rather less than 40% of the move, right? It pulled back to the 618 Fibonacci level. So what that means is Costco made a very nice move. Seller stepped in and brought it down, but they couldn't bring it down below 50% of the move. So the bulls maintain control of that move, right? Let's go back to the daily real quick. So I just want to see what it does outside of the range of Friday's candlestick. You know, you keep it nice and simple. If it goes above, then you can play calls. If you are risky, then you can take it right at the break of the open of Friday. If you want security, and you take it above the high of day. If you want added security, you take it above. If you look all the way to the left, there's a pivot that occurs there at 511.47. It's right on this candlestick, right on this candlestick. You can take it above that candlestick, right? And then it'll be a little bit more pricey, or you have to go a little bit further out the money. But you know, it just depends. It depends on what your risk tolerance is. I think a leap on this would be very nice. I think that we should let it start the move. So like, you know, it has a higher highs, or sorry, it has a higher lows, it has lower highs. I would let it break out of, like, if it touches this point and it puts a green candle right here, I'm probably gonna buy leaps for end of 2024. And we could discuss it. I mean, I think we have time between here and there, right? It's a 20-point move, but we have time to discuss it. You know, I wouldn't mind paying a little bit more just to have the confirmation. And then below low of day, I think that we can bring it back to test that $500 mark, which is previous resistance here. So just high of day, above that, we can hit the 515, 520. Below low of day, 505, 500, 495, right? I think that the 495 might be difficult based on all this volume here. I think 500 is pretty easy. We do have that 200-day moving average, so it might want to pull back to that 200-day, find some sort of price action on it, and then from there either go up or down for Costco. So that's going to be definitely one to watch this week. The 700 call 124 is 1.6, so nice and cheap, and that was that 8 months or so of price. So not bad. If it does make the move, then, you know, even if it gets up into like 600, that's going to be triple in price. So that's definitely a good play there. So we'll keep our eye on it. The next one is Walmart. Walmart's another one on the weekly. I think Walmart made a nice move last week. We made some money on it, and I think that Walmart just, when I first started trading, I used to hate Walmart because it never really moved, and now it's been, you know, lately it's just been making really nice moves and paying really nicely. I think that a lot of that has to do with more traders spending their money on Walmart in the Walmart options chain, which makes it, you know, just by default, that brings the implied volatility up, brings the price up, brings the ability to make money up. So on a weekly, we got this nice little bounce, right? We had this support breakdown into a spring, nice little bounce, formed kind of a bull flag. We had the inside week last week, and we broke the range of the 2 previous weeks to the upside. And now we're kind of forming, you know, let's go into the daily. We formed the doji right on top of that, right? So it can go either way. Let me just zoom in. It can really go either way, but based on the strength of it, and then based on the depth of this pullback, right? This is not a very deep pullback, right? So based on the depth of this pullback, I don't see bears taking control and bringing it back down. If they do, I think we can try to find support at this 148.33 level or this 20-day moving average, whichever one comes first. But realistically, I think that 155 is in the books for Walmart pretty quickly, especially since, let's go back to the weekly, especially with the massive move and then basically a 3-week consolidation, right? with a hint of a continuation of the move, right? So, and the target will be that 154.64. Might take 2 weeks to get there. Might be 1 week. Might be 1 day. But we'll see. But I like Walmart for this weekend, for next week. Next one is Amazon. Taking another sip real quick. So Amazon's a monster. Amazon's an absolute monster. I think we've been discussing Amazon for a couple weeks now. It's definitely on the radar. Just like Google, definitely on the radar. Like, there's just some names that now they just move so well that we're forced to make money with them, right? Which is good. It's a good thing. So this is a weekly chart, but these moving averages are all daily moving averages, right? So just keep that in mind. We had the weekly consolidation here on Amazon, little wedge, little price action getting tight. Some moving averages consolidating down here, and then Amazon last week opened above the resistance, so that falling resistance line came down, tested it as support, and then formed a green candle on top of it. And now Amazon formed a nice green candle, nothing too crazy, right? Not a big candle like this, but like a decent sized candle with a range of a low of 101.39 and a high of 108.15, so about a $7 move. For Amazon, which is just about 5-6%, 7%, 6%, right? I think this one says plus 4 something percent, plus 4% from open to close, but the range of it itself is like 6%. So that's a nice, decent range. And let's go to the daily. It's not rare. You get a 6% move on $100 stock. That's $6. $6 on an option, if you're trading options, is a nice move, right? Because you get a couple dollars out the money. You take those couple dollars out the money, you put them $4, $5 in the money, and now you've made a lot of money, right? So that's why I kind of like these bigger names. DYT says we should keep our eyes on Shop, so we will keep our eyes on Shop. Yeah, Shop is another one that's I think right around this price range, and also makes big, like, Shop used to make like $50 moves. Amazon, same thing, used to make like $50 moves. Tesla, right? Same thing. But I'll take the 6%. I'll take the $6, $7 moves. I'll take that, no problem. So Amazon is it kind of consolidation, right? Little gap up, pulled back, found support on the 50, gapped up, consolidated for a few days, and then gapped up. Now we gapped up right into that 200-day moving average. We had some price action up above it for a little bit. Let's go into the 30-minute. We had some price action up above it just for a little bit. Right at the open, we kind of had a strong move up, strong move down, finding the range. Price went lower and then bounced into that 200-day moving average, found resistance on it, found support on it, made some new highs, and sellers took control and brought it right back underneath that 200-day moving average. So and again, it's fighting it, and it's kind of above it on the pre-market, but this doesn't really count. So let's see how it opens. I think that the reaction off the 200-day is going to be very important for Amazon. Whether it stays above and it kind of forms another candle just within the range of the wick here. Just if it stays within the range of this wick here, is going to be strong, because that means it's above that 200-day moving average. Amazon is a play that you have to, if you buy it on Monday, you have to hold it. Just hold it, because it'll do this. It'll do this on Monday. It'll do this on Tuesday. It'll do this on Wednesday, tempt you to get out, which is fine. It'll do this on Thursday, tempt you to get out, which is fine. But look at what it does on Friday. Amazon it has 1 or 2 days out of the week that it makes big moves, and so you just have to be very patient and catch it and hold it, certain days. So again, I want to see it form price within this wick. Price within this wick means price above the 200-day moving average, which means price can potentially take out high of day, which means price can target the open of this day, which means price can target the close of this day, which means price can target the high of this day. So I want to get in the range of this candlestick here. And just for some consistency, let me go ahead and just hit the bottom of the day, right? I want to get within the range of that candlestick. I want to get between 108.88 and 114. I want to trade here for a few days, right? Stay well above that 200-day. Let the 200-day start curling up. Let all these cross through the 200-day. I don't care how long it takes. I like Amazon. I'm a shareholder, and I'm a customer. I'm a consumer of theirs. I am a partner of theirs. I love Amazon. I think they're great. So, and they're going to do great. They've been paying us for the past couple of weeks. They'll continue to pay us. There's also this kind of wedge here. I'll draw it from here. I'll draw it from here. It's not good. I'll draw it from. I want to collect as much data as possible, which means I want to connect as many dots as possible. I'll draw it from here. I'm not in love with it. Do this. Whatever. Let me just do it. That's it. We have. It gets hot over here. It gets hot over here. It gets hot over here. And again, right. And then you can see the higher lows forming. The higher lows are pretty obvious, right? Right. So nice little wedge. I would still count it within the wedge. That's why I want price to kind of base along this side and then pop above it. So we'll see what happens. If it does fall, then we'll target the low of day, and I got the previous levels here, which I will share. I like to share my charts in the server. So if it goes up, I'll share some upside levels. If it goes down, we'll continue to share some downside levels. But the 200 day again is very, very, very crucial for Amazon. Next one is XOM. I love XOM weekly chart. It's the funniest thing because it's like, besides the fact that it made a nice move. Where's this fib? Where's the bottom of this fib? Oh, I think we're at this. Yeah, at this candlestick. So it did make a very, very nice move from here, the bottom of this candlestick to the high of this candlestick. It pulled back, made a higher low, higher low, higher low, all these higher highs. It broke the low, but this low is still higher than this low. So it's just a deeper pullback in my opinion. And now we have this nice little gap with an inside bar from last week with a range expanding bar, right? So we broke the range of last week's candlestick, both up and down, but we just formed a doji. So it's like almost a nothing week. If you look at the daily, it's just very funny. It's just like bar coding, right? Just sideways, very, very sideways, choppy action. You see buyers like it down here. Look at how many buyers stepped in on this candlestick. So I like it to the upside, which means tech goes down, but maybe not. Maybe they both go up. Maybe they both go down. And I think that the for XOM is probably the better setup out of this sector, personally. Everybody's eyes works differently, right? So like XOM might look good to me, it might look bad to you. Let's look at Oxy. Oxy is another one that, it fell, it's on the 50, it's kind of in a, it's pulled back pretty hard, it has a lower high here, right? So that's why I'm like, I don't really like it. CVX, it has kind of the same look, but it formed a new high. It does have a higher low, so maybe it can make a higher high, right? It does kind of have a vibe to it. XOM is just like really, really nice consolidation. Big move up, big move down. That's all I'm expecting with it. So I'll continue to watch it this week. I want to see what it does. If you guys see an XOM play, which way I think it's going to go. I like it to the upside. I want it above that 116.85. Next one is DKS. DKS paid us lovely on Friday. Congratulations if you played it. Very, very nice move pretty much all week. Let's see. Let's go to the weekly real quick. Yeah, and then so the same move that DKS did. It's funny because they work on like micro levels and macro levels. So it's a Fibonacci, right? So the same move that DKS did here, where it kind of formed some lows and then it broke out and made all new highs, is the same thing that it's doing on the weekly, right? It made this big, massive candle on earnings. It made all new lows, right? Higher, lower highs, and then it made a nice breakout candle. So almost like a pivot machine gun, but the price for the lows aren't the cleanest, so I'm not gonna call it that. I do like it breaking. I like the continuation to the upside. I've had these marked out for weeks, right? These levels here, and it's just a matter of time, right? You kind of got to be patient and let it play out. So on the daily, we got the double bottom on the 50-day moving average. A lot of indecision here. They could have brought it down here on this day, but buyer stepped in and brought it way back up. And it's broken this pivot here, which is an important pivot. I think we did fill the gap. Yes, we did fill this gap here, right? You see the gap filled on this candlestick. And then we went back and we must have left our wallet or something. So because Costco went back, got it, and then and it's just been running ever since. So I want to see it break out of this. There's a little bit of a demand of a supply zone sitting in this box here from these couple of days, right? You have some basing here, you have the bounce, you have the pullback, and then sellers came and took control of it here. So I kind of want to see it break out above this level. I want to see it trading above that $150 mark. it's right now it's on the bottom side of that 150. I want to see it on the top side of that 150. Above that we got that 151.08. Above that we got 152.49, and then above that we have 155. 155 will be my target for the next couple of weeks. I would say 2 weeks out, we'd probably be at 155, but we can continue this move. Although I do expect this to pull back just because it's been going so strong for so many days. I'm just gonna draw a fib on this move. I think these fibs are so ugly. I don't know why they're bold. I don't know what the hell's going on. There. Let me just give it a different color. There. So I would like for it to pull back, if it does, into the 143.50-ish area, right around here, or into this pivot, right into the high of this candlestick here, which would be a 78.6% fib support. So just a little bit of a pullback, just so like haters can't hate too hard, right? Let it pull back a little bit and then let it continue to go up. But I'll be watching DKS. I think it's more upside, obviously, and then we got that 150, 152.50, 155, 157.50, paid in $2.50 increments. Is this part of my list, or is this just leftover Pepsi? Oh no, okay, Pepsi's leftover. Let's look at Pepsi real quick. Pepsi looks great on the weekly. I don't like the daily right now, but it looks really, really good on the weekly. We had the inside bar last week, and same thing, it kind of broke out above the previous range of these two candlesticks. And now we're testing, we have some upper ranges here at 186.54, and we got this 186.86 level to test to form new highs. So I don't like it on the daily just because it has like that red candle that's kind of pulling back. It looks kind of ugly to me. Like, it's not clear to me. Buyers did step in a little bit, but I think we're extended. There's a bunch of stuff I don't like about this chart. But it is not a bad chart. And then I'm gonna go ahead and set my level here above the high of Friday. Pepsi's, I just find it so weird. Like, it moves in an uptrend, but it'll put in red days in an uptrend, which is still very strong, but it's just very weird. But I like it. I like it to break this level. I want to see that ultimately at 190. It might take 2 weeks, but we do have a nice consolidation here with like just 3 days outside of the upper range of this consolidation area. So it can continue to move here easily if it can break above the high of this day here on December 13th at $186.84. So first target 186.84, above that 188, above that 190, above that 192 for Pepsi. Let me go ahead and add a little hash to it. Let's see. And then we'll go into this orange sector. Hang tight for me 1 second. Sorry about that, guys. My kid woke up. She needed some water. All right, so I have a few names here. Actually, before I get into these names, let's do Roku, and let's do Crocs. So Roku, the last time we spoke about Roku, I said I didn't really love it because it was just trading so strongly within this range, like just holding on to this range. They have earnings this week on Wednesday after hours. Now, my only guess is that, there's a negative estimate on it, so that's a very low expectation that came from the company itself. Now, Roku's driven by multiple things. Roku's based on the Roku has hardware that they sell, and then they have software that they license. Now, people buy Roku hardware, Roku sticks, Roku TVs, etc. They're pretty good price. It's a pretty good product, actually. Doesn't really compare personally to the superior Apple product in terms of the hardware itself. The TV, right? The Apple TV is nothing comes close to it. But I think that they have a chance to break into larger market share just because of how well priced it is, how many apps are available for it, the type of partnerships they have, etc. Roku doesn't show ads, right? They don't show ads, and Roku doesn't make content. So those are two big drivers that they're missing out of money there, right? So the only thing they can really do is provide a platform for other companies to showcase their production on, right? So like you have an app, you have like a streaming service, you can put it on Roku. Roku probably takes a little cut, and that's it, right? And then Roku has these TVs that you can buy that are relatively cheap. Good TVs, good quality, good picture, good technology, relatively cheap. Or you could buy the stick, right? And that's about it. If they had ads, they would go insane. If they had their own sort of content studio, they would go absolutely insane, right? It would cost money, but I think that the overall would be very good if they had the right people. Now, that being said, I don't really know how Roku makes money, right? I mean, they're not, if I were to go and buy a TV, I would prefer to buy a Samsung or a Sony TV or an LG TV versus a Roku TV. If I were to go and buy a piece of hardware that has streaming content on it, I mean, nowadays you don't even need an Apple TV or a Roku or a Fire Stick. You can get a smart TV with all that stuff loaded on it already, right? Most people have a laptop that they can just stream to the TV and do whatever they got to do on the laptop, stream to the TV, call it a day. So, most people watch YouTube, most people watch like HBO, and you can just log into those things on TV. So that being said, I just don't know how Roku's making money nowadays. I have to listen to their calls. Let me go to the monthly. Roku used to be trading at like $300 or something. Yeah, Roku was like insane. Like it was as high as $490. $490 was the highest, and now we're sitting at around $58. So, I think that and their technology hasn't changed since they were trading way up here. They haven't added anything new. I think the newest thing that they did was I think they introduced Roku TVs back in this time, back in like 2021. But I don't know. Like I just don't know. So that being said, I would, if you're a fan, you want to buy the shares, or you want to invest in the company, or you want to, for whatever reason, I would listen to their call and see what their revenue streams are. Where are they making their money? If they're making their money strictly on hardware, and that means that nothing has changed, no innovation, they're not going to do well, right? Now, if they delve into these other areas, these brand new segments, such as advertising, such as content, or if they start creating something like maybe they buy licensing for some shows, right? Maybe The Office or something, maybe some Breaking Bad, kind of delve into Netflix territory, then they can start making some money. But nobody's like, there's nothing you can find that's Roku specific, right? Because then you can get like a Roku app on an Apple TV. You can go to Roku.com and sign in with a username, and you have all this, whatever. If they're not doing that, then I don't think they're gonna win personally, right? This is just broad. Now, looking at the technicals, we did have a bullish cross, so the 50 crossing through the 200-day here. But all this choppy sideways price action, I think that, and everything's pointing down, I think is gonna come right back down. You'll find that happens a lot. You'll find that it'll be like a bullish cross that's temporary, and then continuation of the bearish move. On the upside, you'll find like a little bearish cross, or a little bearish cross when the price action meets, when the 200-day meets the price, and everything's been consolidating. You'll see that happen real quick, and then it'll go back to the other side. So the way it's looking now, I mean, it fell out of the channel. We have that 100-day that's sitting right there that can act as some potential support. We have the support of this, pretty much this area here, where all the buyers kind of stepped in. There seems to be like a nice little demand zone here. This is probably an area that can save bulls, as long as they're still actively ready to buy it at this level. And I mean, again, $50 compared to $400, I don't think it'll ever get back to that $400 unless it starts adding some new segments, some new business units. But where it's at now, it looks like it wants to come right back to that kind of 100-day moving average, and underneath that 54, and then underneath that 54, I think you can go straight to 50, right? Straight to 50. Now, I don't know what it's going to do this week. I don't know, right now it's outside of that box, so it looks like it just wants to come and test some of these lower levels. I would split this gap in half between 54.30 and 50.36. I would put a line right there. So those would be the few targets, the levels to target to the downside, right? The 100-day, 54.30, 52.25. 50.36. And if we are looking for upside, then you could just trade into the chop. Right into the chop. I would say $60. I would say 62.50. 62.50, which would be like right here somewhere. Above that, we could take 65. Should get rid of this one. We could just go straight for like 65. Now I've learned recently that I don't like trading in chop. Like I don't want to see. I'm gonna throw a volume shuffle on it so you can see what I like to avoid. All the volume is sitting right here. I mean, it's very clear. All of it's right here. So it'll be very difficult for Roku to get above this level here, 63.70, and into that 66.96. Now, if it does get above this level, then it's in the safe spot, right? But again, it'll take a lot. So I don't think that we see anything coming maybe the day of, right? Like they have earnings on Wednesday, so maybe Wednesday morning there might be a day trade. And then for some lottos, maybe there might be something going on end of day. But I just don't see anything with Roku now except for a downside play into Wednesday. And then from Wednesday, depending on what their market maker move is, we might get something, but I don't see anything out of it now. I hate this chop. I absolutely hate this chop. And I don't like this chart at all. I think this chart's horrendous. But yeah, ask me how I really feel. Let me see. The next one is Crocs. Crocs has earnings on Wednesday. Crocs has been an absolute monster. I think there was like a weird thing with Crocs where it just always constantly beating earnings. Crocs might be like the next let me get rid of this. The next Costco, right? Where just you can make money in a good or bad economy. You know, Crocs is gonna take care of you, right? So Kathy Wood says Roku 605. So I would listen. I mean, if Kathy says it, then she's obviously way more in tune with the technology than I am. I would study up on it and kind of try to understand what she's seeing. I'm not gonna sit here and bash Kathy. You know, Kathy's way smarter than I am. You know, maybe the market took some wrath out on her last couple of years, but you know, I think that she I would follow her. She made me a lot of money in 2020. Yeah, if they're introducing ads, they're gonna make a lot of money. That's what they need to do. They need to introduce something new in their business that's gonna make them money. Because just producing the hardware and not doing much beyond that, like they've had that. They've already had that. So there's nothing new there, right? And the market's all about, this market nowadays is all about innovation. What can you do that's new, right? What have you done for me lately, right? So Crocs has, I'm looking at the weekly, has a nice little gappy move here. Consolidation, nice gappy move, consolidation, nice gappy move, consolidation. Now it's broken out above this high of this candlestick here. And now it's in an area where I love it, absolutely love it, because we have 1, 2, 3, 4, 5 back-to-back red candlesticks with all fresh highs. And then I'm going to go ahead and measure this one here. The 50% is, where is the 50%? 50% is right here at 145. Let me go ahead and draw a line there, 145. Get off. 145-ish, right there. Right. So nice clear targets to the upside. I like Crocs. I own some Crocs. Against my will. I own some Crocs. And you know, I'm in the city. I'm in Brooklyn, and I see these kids, the youth, wearing Crocs all the time. Like there was like 5 kids all hanging out, just wearing Crocs, talking shit. And you know, while I was waiting for my coffee, and I'm like, yo, everyone's wearing Crocs. So, you know, they're strong product, cheap product. You know, they have like a nice community. Usually, if one member of the family has them, then multiple members of the family have them. The father is usually the last one to get coerced, as was in my family. Right? We got them for my wife, we got them for my daughter, and then lo and behold, I got a couple pairs. But I like Crocs. I think they're strong. I think they're good product. They have good partnerships. The thing with Crocs that makes them money is their cost of goods is very low. You can make those things. I'm sure like 3D printed or whatever. You make them so cheap, make them in whatever color you want, and then they bring in a lot of different collaborators and designers. So like there's this guy. Yeah, the margins are retarded. They're ridiculous, right? Forgive my French. They're just disgusting margins on Crocs. You know, whatever it costs, like $45 or whatever to buy them, they probably make them for like $10 a pop, right? Maybe even cheaper. So they're making really, really good money on it. They have like good accessories for it. Like it's just, you know, it's just, I think it's like, and no matter how expensive things are gonna get in the world, I think Crocs are always gonna get bought up. Personally, whether I like it or not, right? I'm looking at a DM. Whether I like it or not, I think Crocs is a very good product, and so and they've evolved, and again, they're the biggest thing for them, I think, in my opinion, is the way that they partner up with certain people. So they have like these higher level designers who are partnering with them. They have like gaming brands who are partnering with them. They have sports brands that are partnering with them. You know, they're not just like, oh, we have a product, let's just keep making the same product, new colors, right? They just, you know, I think Bad Bunny had a collab with them. I think who's this art? I think this K-pop group had, I forget the name, BTS. I think they had a collab with, like, they're just like, oh, all right, this is hot. All right, boom. What's the next thing that's hot? All right, we're gonna jump on the wave with them. They're gonna make a Crocs for us. Like, it's amazing. So I think they're gonna do well. I think we looked at their earnings the last time we discussed them on this call. Let's go to the daily real quick. I want you to see how many green one day. Oh God, sorry guys. One day. Look at these little green flags here. That means that they beat. That's earnings beat. That's earnings and revenue beat, right? Green. They had a bad earnings report after COVID, just like everybody did. But look across the whole bottom of the screen. It's all green except for that one, right? All green, all the way back to 2017. So what do you think is going to happen? Right? And then you got this very nice cup and handle that's forming. Very, very nice, clean cup. Some sideways consolidation here. Breakout, consolidation. Here's your handle. There's a nice breakout boiling into this thing. So, yeah, nobody needed Crocs on lockdown, but we outside, right? Those teenagers at the Starbucks were outside. They had like 4 pairs of Crocs on them each. Like, Crocs are just everywhere. So, and they're comfortable, man. And they're nice, Frank. So wear them. There's memes. People make memes for them. What is this? Oh man, they're good shoes. So I think they're gonna do great. I like the upside targets on them. My bad. I like the upside targets on them. Let me go back to the weekly real quick for some more perspective. Yeah, I mean, we got the cup and handle, nice clear breakout on the weekly. If we can get the continuation, we got a nice little pivot machine gun to break out all of these stop losses to the short side, meaning 147, 150. Let me just zoom in on this. 150, 155, 160, 165, 170, 175, 180, 185. Over the course of the next 6 months, I think we can easily get to that 185 and make a new high, especially with all these little consolidations here, right? Nice little consolidated move, consolidate and move. Maybe another consolidation here before we move. So very, very nice setup on Crocs. All right, so let's go into, I have these last few that I don't know what the orange flag, I looked at these with a different lens. I'm not sure what the orange flag is, so we'll just discuss as we go along. Yeah, I think orange flag is like, there might be something there, but we need to see. It might be like not ready, might be ready in a couple of days. I want to see UPS holding this area of previous support, previous resistance here. Continue to form candles along this line here at 190. What is that? 195. Hold that 195. We can get to 200 pretty easily. I'm targeting this gap right here. Let me draw a box on it. I'm targeting this gap. This is all I want. It's all I want. The last time we were almost into it, and then seller stepped in. So there's a definite, very clear supply zone. You can see that prices kind of based on this day and fell hard out of that zone. So there's gonna be a bunch of sellers stepping in here. I don't mind like tapping it, selling. Let the moving averages catch up. We got the golden cross on all 3 moving averages. Let them catch up to this price over here, and then lift the price above that $200 mark. for UPS. Next one is Microsoft. Microsoft is one of the companies reporting earnings this week. Microsoft is sitting on a 20-day moving average and bouncing. It has kind of a diamond shape, also like a double top here, also support. So like it's in consolidation, but that 200-day, I mean that 20-day might bring it, might give it some energy to pop, right? I think the weekly on this is better. Yeah, and then the weekly, I like the weekly a lot because we had this inside bar last week. We broke out above the range of the high of the previous week, but we're still well within this inside bar. And when we came and tested the low, we bounced. So we're still technically inside the range of this candlestick of the week of April 3rd. So I just want to see a defined move above this candlestick or below this candlestick. So if you are interested in Microsoft, and again, they have earnings this week. Let me add an alert there, and let me add, I'm going to do it. Yeah, that's cool. Whatever. And then I'm going to add an alert here at the low of this week's candlestick. That's what I want. I want, go to daily. I just want it to break that range. Same thing that QQQ is doing. It's ranging, right? Microsoft is one of the bigger names in QQQ. Microsoft sitting on that 20-day. So break below the 20-day, come down, test that 100-day, maybe below that, test the 50-day, keep above the 20-day, break high of day, test this high of day, test this high of day, and then break and make a new high, 295 with Microsoft. Sam was talking about Microsoft getting above 295, and they can see like 320 or something insane like that. So, you know the type of influence that Sam has on the market. So let me just see if I can find it real quick. I don't know if his oh yeah, here it is. So and you know, say what you want about Sam. Yeah, he said some crazy numbers. Here we go. I'm gonna post it in the server real quick. Yeah, so you know, and who knows how he calculates this, but he's usually right? So if 295 prints, 322 possible on Rippy. So that means green QQQ day, green SPX day, no Fed speakers, positive catalyst all over, nice Rippy move, 295 target 322. So that's just, you know, that would be very interesting. That if we get above all these highs here, we get above that 295, we get into 300 territory. From 300 territory, there's not that it's going to do it in one day, but there's a potential for it to do a move like this, right? 1, 2, 3, 4 days. The low of this day was 245. The high of that move was 283. So imagine from 245 to 283 in 5 days. Insane. So it could do the same thing. I think what he's doing is he's measuring a move here. Maybe. I'm not sure, right? Who knows? But I like Microsoft. I want to see it out of the range. I think the 20-day is going to act as support for it. Next one is MRK. MRK is a weekly. MRK has a very beautiful setup. Is this all-time high? Let's see. Yeah, this is all-time high for MRK. So some sellers here left over from this, I think this area here, sellers are just active. Some selling pressure, but overall we broke above the range of the previous week to the upside. I want to see a continuation. We have a nice consolidation, move up, test support 4 times, gap, find resistance, pull back, buyers are active, bring it back up. I want to see a break above the high of this candlestick, which is 116.45. I want to see it get 119.92. I'm not sure why it's 119.92. Let's just call it 120 at that point, right? Let's just call it 120. And then above 120, you know, I don't know. I mean, we have to start measuring shit up here. Let me just quickly do a fib retracement with an extension on it. 1618 is the typical target. I mean, that's ridiculous, right? But if we break out above this level, I got that 120. Above 120, we can hit 125. Above 125, we can hit 130. Above 130, we can hit that 134.63, 135-ish for MRK weekly. So I think there's something that they introduced into the market some new study, some new program, some new drug, something new that I just saw their name in the in the news channel the other day. And so I think that they or if not them, competitor, and even still they stand to benefit. But I do like the weekly setup on it, as well as a daily setup. You know, you got a nice clean cup and handle, double bottom, whatever you want to call it. All moving averages are consolidated. Buyers are active, sitting at a previous level of resistance, right? Acting as support now. So very, very nice. It crosses off a lot of checks. Or crosses off a lot of the criteria, right? So that's MRK. Next one, I think I have a few more. Yeah, I have a few more. Disney. The only reason Disney's on watch is just because, you know, it was struggling with that 200-day moving average a bunch. And when I put out a call for it, right, on this day, and it failed. It came back down underneath the moving averages, gapped up above the 100-day, 20-day, and currently sitting on top of the 50-day. Let's go to 30-minute. Currently sitting right on top of the 50-day. I needed above that 200-day moving average. So, you know, I think we have a magnetic move from here into the 200-day moving average. I think that we have another reaction out of that 200-day, either down or up. But I think that it's still in play. There's nothing on it, obviously, right now. We'll see what it does in the morning. I'm going to go ahead and set my alert for the high of Friday right here. And kind of see what it does. I'm expecting for it to continue to the upside, especially with all these moving averages sitting right on top of each other. I think there's more upside on it. So that's Disney. And that's what it was. This group, it was all like conditional, you know, something to watch for the next couple of weeks. Dollar General. The reason why I like it is because it has formed an inverse head and shoulders. Here's your shoulder. There's your head. There's your shoulder. There's a higher low. It crossed the 50. It came back and back tested it. And I think it's going to do the same thing on this day. It's going to come back and kind of back test it one more time before it tries to target this 100-day. I like this setup for a target of the 100-day. I'm going to show you my risk reward on it. Break above the high of day. Set your stop at the 50 to enter the trade. Right there. It's not the best, but it gets better, right? DG has been getting hit by OSHA lately. Well, guess what? I don't think investors care about. Yo, man, the stock market really brings the worst out of people. I think that we should all really like constantly take a look at our humanity and make sure that we're still in touch. You know, I think that, you know, because we're part of this game. So I think that we should just all remain in touch. You know, let's not just think about our profits all the time. Let's think about people. But I don't think that investors care. You know, so I think that that's not a good sign. But I think that they don't care. I think that we're going to continue to move to the upside. Dollar General, whenever there's bad news that concerns employees, usually it's good news for the market. So that being said, that might be a bullish catalyst for us. Break above high of day, set your stop at the 50-day, target that 100-day. That's a 1.5 to 1 move risk reward ratio. Not that great. Once you enter, you can bring your stop up to that. And I mean, like, leave it here, give it some room. Give it some room to come down to that 50 before it goes up. Once it starts going up, then you can bring your stop up. Once you bring your stop up to low of day, you got 1.84. Once you bring your stop up to close, you got 2.2. Once you bring your stop up to open, you got 9, right? And now these typically work out on very small time frames, and they also work out on larger time frames with long swing trades. I don't think that we're ready for like a long swing trade yet. This is probably better off on a 30 minute, right? Something like that. You could take your entry, you could bring your entry lower if you want. It really depends. Obviously, a lower entry means it's more risk, but the more risk, the higher the reward, right? Let me just zoom out of this real quick so we can see what the risk reward. This looks like an 8 or something, or 9. Let's see what it is. It's a 7 to 1 risk reward ratio if you take it above that pivot. Now, you can bring it lower, you can bring your stop loss up, whatever it is, however you want to adjust this. But to me, there's a lot of room above this level here at 221.38 to get into this gap here, And then if we can get into that gap, that 100 days magnetic. So I like DG to the upside. I'm just going to leave that there as a reminder. And then the last one, or the second, I think this is the second and last one, LRCX. Again, LRCX is one of those that it paid us nicely. I mean, we caught that move on Thursday, and that I think went insane. It went from like $2 to $12 or something like that. So we caught it. Luckily for us, we caught it on a nice day. We have an inside bar. So I want to see it break the range of the bar itself, upside or downside, and then we have predetermined target. Let me get rid of all these previous lines, actually. I hope it keeps my, yeah, okay, good. Clear target to the, I like inside bars because they give us the clear target to the upside, clear target to the downside. We got that 50-day, we got this pivot high, we got this previous resistance, we got the 100-day. For LRCX. LRCX will do it. It'll make a candle that does all of this in one day. So, you know, we just got to make sure we catch it. We're on the right side. TSM, MU, NVIDIA, AMD, QQQ are all going in the same direction. And LRCX will give you a monster day. Last one is JPM. JP Morgan on the weekly, I believe it was. Yeah. Do daily. Daily's nice. I mean, it has like a kind of a, if it dropped, consolidated on the 200-day, bounce, came above all moving averages. Now it's forming kind of a flag. Also like kind of a cup and handle vibe. I think this can go back to test its high here at 144.28-ish. But I think that it needs to break out above this channel here first. So if you see JP Morgan and you like the setup, you think there's something there, especially with like a positive earnings, there's no reason why I won't continue to move up. Let me just zoom in on this a little bit more. There's no reason why this won't continue to move up. So I like it. They're my bank also, although they suck as a bank, but you know, that's what banks are designed to do. They're designed to suck your money. But they are much better banks than other banks, in my opinion. They're also criminals, but that's neither here nor there. But if they would like to sponsor Gold Rush, then by all means, all JP Morgan. So nice cup and handle, sitting above all moving averages, retracing some of this move, but definitely not this is the move from the bottom of this candlestick way up to the top of this candlestick, retracing just a little tiny percentage of that move. They have the Epstein case going on. To be honest with you, I don't think the Epstein case is going to be a catalyst for this thing to move in one direction or the other. I think that the initial reaction to it might have made a move. I don't think that people who are shareholders or whatever, or like short sellers or whatever, like short sellers are not going to go against JP Morgan, especially since the Fed is ready to bail out any banks, especially since I don't know if you guys are privy to you know, if you have a lower credit score, you can, like, they're basically going to start predatory loans, but they're going to back the loans from higher creditworthy lenders, higher creditworthy borrowers. So, like, if you have a high credit score, they're going to tax you $40 on top of whatever your mortgage is or your loan payment, so that they can take that extra money just in case the people who have bad credit scores default. It's like an insurance policy. So they're charging you a higher premium because you have higher credit. So, and like the government, the Fed, you know, policymakers, they're all part of this. And so there's no reason why bad news is going to make JP Morgan go down. The only thing that can make JP Morgan go down is like bond yields overall, or like another bank run. I think would be a big one for some of these banks to go down. Another SVB situation, which we don't hear about anymore, right? Like I haven't heard about that in a couple of weeks. So interesting. But I do like the cup and handle on it. I think that has a potential to hit that 145 once it breaks through this channel above this pivot here at 143.44, and then above 144.34, and then there we can get 145. So I like it. Let's see. Let's take a look at Tesla and Apple real quick because I haven't talked about them in a couple of weeks. I think we mentioned Apple last week, but Tesla. Tesla has a very nice setup. Let me get rid of all of this. Tesla has a very nice setup here. So there's a potential, and I might be reaching here, but there's a potential demand zone right here. right there. You see as price consolidated on this day, gapped up, pulled back to this level. Buyer stepped in and brought it into a new continuation of the trend. Came back to this level and bounced out of this level. And now same thing, it kind of, support was caught here with buyers interested in keeping it above this level on Thursday, and then after earnings, and then on Friday, inside bar, green bar, inside bar. I mean, that doesn't mean much, right? But I think it's just a level of interest. Below this level, we have the bottom of this doji, where I bet you there's some buyers still active in this level, like some buy orders just chilling here waiting. But if we get below that, then we got this nice little gap to the downside, 146. I would love to have Tesla back at 146. That would be a gift. I heard Kathy Wood say something about she's expecting Tesla to do be $2,000 by like 2027 or something like that. So if you're from the school of Kathy, then go ahead and start loading it now. I think it's still a good price now. I think anything underneath $200 for Tesla is a great price personally. So upside play, break above the range of Friday, go into the range of Thursday, break above that, got the 100-day, and then we got the low of Wednesday, and then we got this area where we can trade back in, right? This range where we can trade back into. Break below the low of day, we got the low of Thursday. Below the low of Thursday, we got this pivot, this doji here all the way to the left at the last earnings, which is 3 months ago, and then below that we got the little gap. So either direction I think will pay us. Tesla will give us money this week. This week we will have a Tesla play, absolutely. I'm actually gonna just set my alert and call it a day. Let's see, Tesla there. Set an alert on Tesla. We'll look at Apple, and then I'll go back to watching the Timberwolves get smoked. Or get swept, rather. Let's see. Got the Apple. Apple Weekly. The reason why I don't want to discuss Apple Weekly, let me just get rid of it. Get rid of all this stuff. Apple Weekly. There's a lot of sellers sitting right here. A lot of sellers. You see all the sell pressure in this week. A little bit of sell pressure this week, and then lots of sell pressure this week. We formed a red candlestick. Now, Apple, I think I read a headline about their production or their output of MacBook M2s was greatly decreased, by like 40% or something crazy like that. Which is wild. That's a massive decrease in production or a massive decrease in demand. But then I read something about like them potentially picking up, 30% or something, or 40% market share in India now that they open up that new Apple store. And now that they've shifted their production to India, I think they're like more than shifted their production. Like they're like still obviously doing stuff in China, but I think that like India is like the main hub now, and you just see a bunch of positive news coming out of India now that's following this Apple news. So I think it's all connected. But anyway, the MacBook thing is not good. The iPhone production increase and demand increase is very good. iPhones are easier, faster to sell. You can sell more iPhones than you can sell. For every I have a MacBook. I'll have this MacBook for like 4 or 5 years before I get another one. I'll probably get a new iPhone in another 2 years, right? I'll get 2 iPhones in the time I get another MacBook. So, so that's just the way that it kind of works with the cycles. So I think that they're going to be okay in terms of news. I just don't know. I mean, I see a bunch of sellers sitting there. There's a 20-day moving average that's sitting right here that can potentially act as support. Apple never really, I mean, it did pull back hard, but it never really like pulled back like the way that like Roku pulled back or Tesla pulled back, Nvidia pulled back, right? It didn't give us like those crazy deep pullbacks. I mean, this one was kind of deep, from 170, what was it, 183 to 125. That's a nice pullback, but I mean, people were waiting for Apple to collapse, and come down to like, I think this gap right here was what a lot of people were eyeing. Between $100 and $96. They were looking for that gap to fill in this massive pullback, and it didn't, and it won't, right? It won't. So let me go ahead and add a VWAP to this real quick. One here, one here, one here, just want to put one here as well. Yeah, I mean, if this thing does break below the 20-day moving average, I think the 50-day is going to sit there and catch it. This is on the right side of the 50, where it'll probably stay on the upside of it for a while, unless there's some really bad news in tech. There's nothing much going on. The COVID low was when? Oh, the COVID low was here. No, COVID low was over here somewhere. Hold on, let me go to it. Oh, it was over here. It was over here. Oops. Over here. And it was, let me go ahead and make sure this is on the low. Yeah, so it pulled back, COVID low VWAP. Yeah, yep. COVID low VWAP and then bounced. I mean, that's it. That's it. I mean, that's all you're gonna get. We're not gonna get much. We're not gonna get much, right? So I think Apple's gonna be, there's more to the upside, especially with what's going on in India, what's going on in AI. I know Apple has a sort of AI project that's cooking right now. Let me get rid of some of these. I could just keep that COVID low one on there. That one's healthy. Right. I know they have something cooking. They still have that AR glasses project. They still have the car project. So let me go ahead and draw a line here because that looked like it was interesting. Right there. You have some resistance here, support here, resistance, and then below, obviously underneath that 20-day, we got this pivot, we got the 50-day. Yeah, we'll look at Apple tomorrow. I mean, if we look at ES real quick, it looks like it wants to go back down and test some of the support level here, based on where it's at now. So, there's no sense in looking at Apple right now. I just don't see the setup on Apple right now, especially with that 20-day sitting there. We'll see what it does, but I'm sure there'll be another, if there's a Tesla trade this week, there'll be an Apple trade this week. But that's it, guys. Thank you so much for being part of this each and every week. We've built a nice track record with this watch list where I try to keep all of my plays, as discussed on this watch list, and and they've been so far, you'll see these names, nothing else but these names, and maybe you'll see an Apple and a Tesla, right? But nothing else but these names in the gold mine for the week, so that you guys understand what am I looking at, why am I looking at it, how do I expect this to make us money, etc. So hope you guys are getting value from this, and once again, thank you for being part of this call each and every week. You are very much appreciated. Take care, guys, and I'll see you tomorrow. Peace.